Hi, stock investors. JJ here. Welcome back. We've got Tom Lee today. I'm going to react to Tom Lee, who's making more predictions. Let's see what Tom Lee's got to say. Now, I have been blocked by Tom Lee on X lately for suggesting that nobody can predict the stock market consistently over time, but he thinks he can.
Here to break down the road ahead for stocks as we head into the sometimes tumultuous month of September is Fundstrat Global Advisors co-founder, head of research Tom Lee joins us here at Post 9 on a summer Friday. Tom, thanks for coming in.
Great to see you.
Was it last week? Was it difficult to keep your bearings in the midst of that crazy price action?
Okay, let's just recap here because I've made videos about this and I put some in the description. He has predicted that the Russell 2000 small cap stock index is going to go up about 15% in August. We're over halfway in August and it is not looking like that at all since the beginning. It's down. It's down so far. There's still time to go, but I don't know why he makes these predictions. I think it's to get on TV. It helps his business, but people seem to ignore that he is wrong quite a lot of the time. He's had a good run on things, but we'll have to see what he's saying this time about small caps. Are they going to even ask him about his prediction for August?
Without question, because the market had been whipsawed by data point to data point, as you guys were recapping. The jobs report raised recession fears. Big risk off. Then we got inflation this week, which was pretty tame, and I think markets suddenly went back to thinking about liquidity coming into markets. I think that the data dependence of the markets and the Fed is very tough for investors. And I think if you look ahead, I'd say we always know the summer is tough. Summer probably runs through October, but I don't think that anything's changed into year end, which should look pretty good.
But are you lower?
Okay, into year end, he said that the Russell 2000 small caps index will go up 50% this year. That's what he's predicting. He thinks these are likely. I don't know why he's making these relatively short-term predictions. It's just he can be wrong so easily. He's got also Bitcoin. Big predictions for that. He's a perma bull.
Conviction now than you were 2 weeks ago?
No change in our conviction, but it is just recognizing August historically is a tough month for markets. I mean, one thing that maybe investors can be encouraged by is since 1928, the most common month for the summer low is August. And the most common week
so he's changed his tune there. No, it's not. There's not the great rotation into small caps now. It's just August is a tough month, it turns out.
The first week of August. So I think maybe the worst is behind us, but it doesn't mean we're straight up from here.
Right, and I guess the question is, I keep going back to, that moment in mid-July when we were at the highs. You were just shy of 5,700 on the S&P 500, and everything was a go. It was, the AI earnings path was kind of unquestioned. In addition to, general soft landing expectations, you kind of didn't have a lot of painful trade-offs to worry about in terms of policy or growth. Can we get back to something like that? I guess the idea, as you say, maybe summer lasts through October. Do you expect that we're going to have to continue to reset around these levels?
Yeah, I think if my best guess would be it's still going to be a struggle, but we're climbing the escalator again. I think Jackson Hole is going to set a positive tone on balance just because the evidence is growing. FOMC members want to be forward-looking. As you guys are pointing out, data dependence is dangerous at turning points. And then we get the jobs report for August, which I think should reverse some of things that could be temporary. I mean, that's a guess, and if it is, then recession risk is sort of reduced. But now we have real rates are too high, and that means investors will be comfortable with cutting.
I'm thinking back to some of the notes you wrote after the last jobs number, and you looked at Hurricane Beryl and the number of companies in Texas that had no power for 2 weeks, and you do think August will be reassuring on the NFP print?
Yes. I mean, in some ways, the weekly claims is telling the story. We had a surge in claims, multi-month high that have come down since then. And so even if someone says there was no effect from the hurricane, how do you explain claims really improving so much, especially in places like Texas? And, a million homes without power for 2 weeks, how could that not affect the local economy and the jobs market.
This rebound that we've gotten from the lows of early last week, initially, certainly until yesterday, it was back to the first half winners. It was a lot of the mega cap growth stocks, and you know, the equal weight S&P really didn't have that much of a pullback, and it's closer to its highs. But small caps definitely got a flush, and yesterday they rallied big on that retail sales number. But it seems like that's still been a complicated attempt at a rotation.
That's right. You know, they always say bottoms are tough and bottoms are a process, and small caps are really in the process of what we think is a multi-year bottom. And so conviction is not going to be as strong as things that have been working. Okay. I think most people's toolkit is to buy the triple Q, you know, the NASDAQ or...
Okay, so he's changed his tune here after saying 15% when, you know, things were roaring the rotation. He's definitely changed his mind here. So why aren't they asking him about that? Why are they, you know, pussyfooting around here? Now, don't get me wrong. I like small caps. Most of my portfolio now is in small and mid cap stocks. I talk about this on the Art of Value Patreon. I'll put a link to that in the description. Do weekly investing updates. I'm going to do one straight after this video, actually, and also one of these stock analysis course. I'm going to record those today. It's just $5 a month if you want to go over there, and you can binge watch that if you want to. And I do talk about small caps, and so I do want, you know, small caps to go up. I'm not selling enough to predict that it's going to happen within this month, by the end of the year. And it is about small cap stocks. I mean, it is about stock picking, and the stocks that I have picked are doing well actually this year. So compared to but I wouldn't pick the Russell 2000 index to go up by a certain amount in a certain time. I think it's crazy. It gets him on TV. Maybe it gets some clients, but I don't know what his clients are thinking when he makes predictions and they're wrong like this.
Or the AI names when they want to get back in the markets. But cutting rates at a time when small caps trade at 10 times forward PE, better earnings growth, and then a visible path to easing, I would say it still makes sense that the risk reward is in small caps.
And then, you know, we had
so he's still picking small caps to do well, but not being so specific, not as confident as he was when the small caps suddenly had that massive jump that we see here from 5th of August. It has gone up 5%, so there's still time. He could be right, and he's had a good run, but as Warren Buffett says, nobody can predict the stock market consistently all the time. Forecasters are pretty much useless, but people go along. He's very popular, incredibly popular.
A miss on housing starts this morning. So it's funny, the parts of the economy you thought you could rely on for a while, maybe you're giving way as other ones maybe start to bottom. But what's your thought there in terms of the flow through to the rest of the economy?
I think housing, auto sales, and durable goods are essentially in recession. It makes sense because cost of money is so high. I mean, it's super expensive and hard to afford a home or to buy a car with these rates. These are also directly benefiting from Fed cuts because adjustable rate mortgages adjust, business loans adjust, auto loans, credit card, they're sensitive to short-term
builders
rates.
loans too. I mean, if you're building
that's
a house.
right. Cost of money for builders, yeah. And so I think these...
Let's put the interest rates into perspective here. They're not historically high. If you look back, they're over a long time, interest rates right now aren't historically high, as he's saying there, that it's saying it's super high, but they're high compared to what we had during the pandemic and after that, and for the last, I don't know, since the GFC really, around 3 and less, but historically they're not high.
These really benefit from an easing cycle, but a market that believes there's an easing cycle underway.
How many cuts you think we get this year?
I'm looking at consensus, which is somewhere between 4 and 5.
Before the end of the year?
Yes.
So about 100 basis points?
I think that's right, but it depends on where inflation prints the next couple months. But our base case is that we're on a glide path towards 2%. That's better than consensus. So I think
more predictions on interest rates, 4 or 5 cuts by the end of the year. Where I am, the country I am, New Zealand, has cut once. Probably the first out of the Western countries to cut. I think if that is correct, they've cut by 0.25 just this week, and central bankers around the world, even the US, will be looking at a small country like that. We were first to raise, and now first among the first to raise and among the first to cut. But again, predictions of 4 to 5. Remember back at the beginning of this year, people were saying 6 or 7 in the year, and then it all changes month to month, week to week. Why predict it all?
I think 4 to 5 still makes sense.
And you've been, part of your thesis has been that elements of CPI have been falling, in your words, like a rock.
Yeah.
I actually saw that phrase repeated in another desk note yesterday, so that's spreading. But are you as assured of that? And when you look at things like car insurance or some of the coincident costs of owning a vehicle, as you point out?
Yeah, I think one of the things that surprises us still is that two things.
I had made a video about that. He said that inflation would fall like a rock. It does seem to be coming down within that zone, so he's been correct about that. But, you know, it just has been consistently falling.
They're keeping inflation high on a weighted basis. Shelter and auto insurance. Auto insurance adequacy is there now. If you look at the results from these auto insurers, they don't need to raise rates, so I think that's cooling, and that'll come in the second half. And for housing, rent is stabilizing, and I think housing is going to cool. It just needs to get to 3 to 4%, and then markets will be comfortable that we're back at 2. But median inflation rate is still 1%. That's, you know, below.
Yes. Well, I think as Greg Ipps said this week, rents are inertial. It takes time for those new rents to cycle in.
Yeah, that's right.
Okay, he's there. All right, lots of predictions going on there about, you know, what can happen in your portfolio. In this client's portfolio there, I say it's crazy to predict just on a short-term basis like this. And speaking about portfolios and small cap portfolios, I use ShareSite, and I have this offer for my viewers here, special offer. If you go to this landing page, I'll put a link in the description to that for ShareSite, which is a portfolio tracking and reporting tool. Very good. I wouldn't recommend anything that I don't use myself. You can sign up for free here, but the premium features, there's a lot more there. Bring all of your investments into one place, track them over time. You can even bring them in historically to work out how you've been doing over the years. If you're not new to it, you're going to go back and bring them all in, but it brings trades in automatically. As I said, I'll leave a link in the description to that. There's a video here. Check that video out. It's got pretty informative, and this landing page has got a lot of information. It's good for tax reporting as well. Many things it does, and it's very good. So I'll leave a link for that. And thanks for joining me today. Thanks for your company, and I'll see you in the next one.